Hello, my name is Maya Sybil. I am a reporter and content producer at fundoperator.com. And today I'm joined by Andrew Warwick-Thompson, Chair of Trustees at Scottish Widows Master Trust. Hi, Andrew. It is great to have you here today.
Hi, Maya. Good to be with you.
Wonderful. And Andrew will be speaking on day 2 of Private Markets Investor Europe 2023, which is on in London on the 29th of March 2023. And he is speaking in a panel called The Challenges and Opportunities for DC Scheme Investment in Private Markets, Regulation, Administration, and Governance. And so we are going to dive straight in with our first question, which is, starting off broadly, what are the challenges and opportunities in DC defined contribution schemes in private markets?
I think the biggest opportunity is diversification. To be honest, I think if trustees don't consider investing in private markets, they're shutting themselves off from more than 50% of the investable opportunities in the markets at the moment. So I think the question is more about why trustees are not investing more in private markets rather than whether they should.
Wonderful, that's great. So we're going to stay on this vein. And can you discuss the regulatory and governance issues that those who do invest might face?
I think the biggest issue is operational, and there are some regulatory constraints as well. The biggest operational risk is that the normal expectation of DC schemes is that all their funds will be daily priced, and you clearly can't daily price something that's illiquid. And so there are operational structures that need to be put in place, which are quite complex, in order to get illiquids into DC schemes. But it's perfectly possible to do it. There are some specialist platform providers out there who are able to do that. And indeed, on one of my other schemes, we've done it with them. And you also need to take into consideration how the fund is structured itself, to ensure that you have some sort of liquidity built into the fund. In reality, though, the liquidity issue is best dealt with through the cash flow of the fund. Most DC schemes in the UK are very immature. They have very, very strong cash flow. And so you can manage the illiquidity simply through the cash flow of the fund. That doesn't let you off the hook of stress testing the illiquid fund itself. But if you build sufficient liquidity management into the structure of the fund and you use the cash flow of the scheme itself, I really don't think any of the liquidity issues are going to come to pass for many, many years until the schemes are much more mature than they are now.
So given that that's the case, do DC schemes require more admin or more admin effort? And is there sort of thus a higher administration burden that you're seeing?
Yes, there is. It's not to do with the benefits administration. It's to do with the platform administration. So the way how you actually structure the fund and you manage the fund on the investment platform, and that does require a specialist platform manager. There are those that have the expertise and the technology to make that work effectively, and there are those that don't. And that I think is the biggest barrier, frankly, at the moment. And that does need to be addressed. You do need to have an expert platform manager to make this work effectively.
That's perfect. That's actually going to lead us right into our final question, which is that do you see these issues or the issues in these areas, such as everything you've been describing from regulation, administration to governance, becoming more pressing as the market grows and adapts, or will the kinks perhaps get ironed out?
I think the kinks are already being ironed out. I mean, the regulatory one is to do with the investment vehicle that you use. In the UK, we have the development of something called the LTAF. And the LTAF provides us with a regulatory framework that will be able to accommodate illiquid funds within most DC schemes in the UK. There's a question mark about whether that'll work in the retail market. It certainly works in the institutional market, which is where I work. That's relatively new, it's relatively untested, but we're going to see funds coming to market over the next 12 months. And they effectively are trailblazing. They're sorting out the regulatory and the operational issues. And so I expect a load of other providers and schemes to come into the market with illiquid funds in their DC portfolios pretty quickly, actually.
Wonderful. That's great. That is all we will have time for today. But thank you so much, Andrew. And again, Andrew will be speaking on day 2 of Private Markets Investor Europe 2023, which is on in London on the 29th of March. And he will be speaking in a panel called The Challenges and Opportunities for DC Scheme Investment in Private Markets, Regulation, Administration, and Governance. And you can find more information on at www.europe.privatemarketinvestor.com. Thank you very much, Andrew.
Thank you, Megan.